What's going on, everybody? This is Dan French here, and we have another episode of French Workbench podcast.
I've heard of that.
Yeah, it's kind of new, and we have another guest in. Well, he's been not a guest. I'm going to say you're part of the show now. Mike Keeler.
Wow, okay.
Yeah, Peak Financial Solutions.
Did I get my name on the intro then?
Yeah, exactly. So, Mike, what's going on, man? I know you were in San Diego, and how were things out there?
You know, that was the first time I've been on an airplane in over a year.
Yeah.
It was pretty interesting. Flying down there, it was completely packed. This was on Southwest that was having middle seats empty. Not anymore.
Yeah, you did actually a midnight flight, is that right?
On the way back, my flight was canceled due to all the weather that's going on.
Okay.
And holy cow, I got home at midnight last night, so as soon as this is done, I'm going home and going to bed.
Well, everybody out there knows that what we're trying to provide is value. You know, there's a lot of podcasts out there that they just talk and maybe it's entertaining, but we also want to provide the value back to people and make it a little bit more of a homey experience, I guess, right? If you want to call it.
Yeah, I just try and provide some information that you may not be getting elsewhere. Help people out. That's what we're trying to do here.
So we're going to talk today a lot about life insurance and when to use or do you think I guess the question is, should somebody consider life insurance? You know, what should people do as far as looking at life insurance? Is it something that, I guess what age you should start looking at this? What things that, you should be looking for when you talk about life insurance and how to maybe go and approach finding somebody, because you deal with that, right? So
I am registered or licensed to do life insurance. Life insurance is a tool. And, if you think of your toolbox and you got to fix something, you go to your toolbox and you get the right tool out to do that.
Right.
And is it a screwdriver? Is it a hammer? Is it a wrench?
Sure.
And there's no one right type of life insurance for everything. And that's something people have to understand. There are different types of insurance for different needs.
Right.
One of them is term insurance, and that's one of the most popular ones.
Term insurance, what is that, Mike?
So it's just there for a short period of time. So people will buy a 20-year policy or a 30-year policy. I mean, why do you think a 30-year policy is popular?
I have no idea. Is it because... Tell me.
What do you do that's 30 years long?
Well, you talking about a mortgage?
Yeah.
So,
I mean, it's often there to protect a family, pay off that mortgage should something happen.
Gotcha. I get what you're saying. So you're saying in case something happens, right? If something happens, then somebody can come in and take over and...
Right. Our plan A is everybody grows old together and...
Right.
It's wonderful.
Right.
Plan B is, wow, what happens if somebody gets hit by a bus?
Right.
Then what do you do?
Right.
So insurance is there that's what insurance is in general. It's to help protect against some sort of risk. Auto insurance, homeowners insurance, life insurance, they all protect against some sort of risk.
So let's talk about what let's look at Mike's website here. We can maybe look at this really quick. So Mike is with Peak Financial Solutions, and he's a financial planner. He's been in the game for financial planning for quite a long time, right, Mike?
20 years.
And so if you scroll down, you have a lot of good information as far as really just, different varieties of things. Let's look at your resource center. So retirement, you got estate, you got investment, insurance. That's what we're going to talk about here today. Tax, money. So there's a lot of good information regarding just...
Yeah, I mean, it's free to use my website. Just go on there.
Yeah.
And you'll find something very interesting usually.
Yeah.
I get a lot of compliments on that. There's a lot of awesome content there. We work really hard to curate that. I don't write everything, but I can find good stuff.
Pretty much everything in there.
Yeah.
So let's talk about what you do when somebody comes and sees you. They say, okay, look, I want to set up with life insurance. I want to protect my family. I want to make sure that if something happens to me, is there different policies that you can write up? Obviously, there's different amounts that pay out, right?
Sure. You need different types of insurance at different times in your life. So when we bought our first house together, my wife and I got a life insurance policy that was there to help protect that mortgage, right?
Sure.
Because, if I died, all of a sudden we're down to one income, and then what do you do?
Correct.
Can't
Yeah.
afford the mortgage.
Yeah.
So, the life insurance is good for that. Then we had a kid. Oh my gosh, right?
Right.
What would happen if I passed away? And, could my wife raise the kid on her own? Working in childcare, holy cow, that's very expensive. So I bought a big term policy, a 20-year term policy, because after 20 years, the kids aren't my problem, right?
Right.
No,
they're not. They still are. It's funny is because we have a lot of my parents, they always talk about this, that when you have kids, it doesn't just end at 18. You have to, it keeps going, right?
My dad said that too.
Yeah. I don't know if that's an old school way of thinking, but when you're 18, it's like people think, okay, get the boot and you're out. You got to figure it out on your own. Seem like kids these days, they're staying at home, learning things a lot more, right? And they're getting a little bit more time to figure life out.
Yeah, well, I'll give you a great example. Sunday, my son calls me and says, "Dad, there's smoke coming out from my car." I'm like,
yeah.
What? And turns out his air compressor, or the air conditioning compressor, locked up.
Right.
And so the belt's spinning on there. It's just creating smoke. Oh, turn it off.
Yeah.
And he's sitting there FaceTiming me. I'm down in San Diego trying to troubleshoot his car. And he's 20. He doesn't know all this stuff. I mean, he didn't quite realize that what was going on. He just knew something was bad, which
sure,
that's good.
Yeah, that's good.
Because if he kept driving it, the belt would eventually break, and then the water pump would stop working, and then we'd have a brick of an engine, right?
Right.
So, but you worry about these things, and I had to help him solve this problem. Yeah.
Well, let me say this. So I know a lot of people think that, getting life insurance is something that you figure out down the road. Maybe you're in your 40s or your 50s, maybe when you start to get older.
Yeah.
I don't know. I mean, I'll be honest with you, Mike. I didn't even think about it.
It's there to solve a problem. So you're a dad.
Yeah.
And what would happen?
I'm dead?
You're a dad.
Oh, I'm a dad. He said, "You're dad." I'm like, wait a second, man. I'm right here.
But what would happen to your family if you died?
Yes.
Right? How does your wife care for your son, or all that stuff?
Sure.
That's pretty complicated.
Sure.
And is one income going to work?
Yeah.
Probably not. So this is where life insurance can come in. And you can get a term policy, which is they're very cheap. The reason they're cheap is because they rarely pay off. I mean, what are the chances of you dying in the next 20 years?
Hopefully not good.
Yeah. Well, I mean, statistically speaking, you're going to live in your 70s, 80s, right?
I hope so.
Yeah. I mean, that's plan A, right?
Yeah.
But plan B could be you just walk out and get hit by a car. And then what do you do?
Some of the things you have on this website here, let's take a look at this really quick. So you have some things that we can bring up that show. If you come down here and you scroll down, this is some information on your website about if you think about getting life insurance. So does that typically start? You have to have a life insurance agent, right? It's not a financial planner, is it? Or explain that.
Yeah, I mean, you can buy life insurance online.
Okay.
You don't have to have somebody, but it actually is sold through an agent.
Okay.
The agent could be online. It could be me.
Sure.
There are people who only do life insurance, and you can buy it through them. So, what you're looking at there is something about term life insurance. And this is something that I bought when my kids were born.
Sure.
It's there to protect them so they can be cared for if I disappear from the picture.
Okay.
Right? I mean, that sucks, but, well, at least to me.
Well, I think a lot of people too, they don't really know, I'll give you an example. So my uncle passed away, right? This was about 5 years ago.
Okay.
And during that time, he didn't know he was diagnosed with cancer. And it was a multiple myeloma, very serious, very aggressive cancer.
Yeah.
And I remember the time, it was really amazing because, as I was growing up, he was almost like a hero to me, right? So when you start seeing people that are going through the process of having those issues, and then they don't have any, like he really didn't have any plans that were set up because he didn't think, he was only 53. He didn't think like, well, this is going to happen to me. I mean, I think it was like maybe 8 months before he got diagnosed, he was out on the strip. He was having fun. He's 53. He just had he had a new girlfriend. And so it kind of snuck up on him. And so what I'm saying is he immediately went down and got a life insurance policy because he didn't know if he was going to make it. there's a lot of data out there that says, you have not a good chance of long-term survival. I think at that time when I was talking to him, I think the person, like there was like one person that he did research on that lived 20 years. Mm-hmm. And so make a long story short is he left a life insurance policy to his kids, which kind of helped out with college and stuff like that. But it wasn't until he was diagnosed with a terminal cancer mm-hmm. that's when he started to think about that. So
that's a challenge, because what life insurance company would underwrite somebody who's got a terminal cancer?
Well, personally, I don't think he told him personally.
Yeah, well,
and, what I mean?
That's kind of dangerous.
It's dangerous.
And that's why I got the term policy when my kids were born.
Yeah.
Now, here's the deal. Every day you're getting a little bit older and a little bit less healthy.
Yeah.
Right? So you want to buy insurance when you're healthy, when you can afford it.
So it gets more expensive as you get sick, if something's happening.
Well, as you get older,
yeah.
right? Your cholesterol starts going up and things start breaking down in your body. It gets more and more expensive. It's very cheap to insure a 20-year-old, more expensive to insure a 50-year-old.
Similar with like medical insurance, right?
Sure.
So like there's a lot of challenges going on right now with medical insurance where it costs a lot of money for people. Obviously, if you're older, you got more health risk.
Sure. Yeah.
So I don't know. That's the dilemma. Do you really want to invest into something like that when you're in your 20s or 30s? Or do you wait until you start to get older? Because guess what? Chances are you're not going to have that many health issues. I mean, statistically speaking.
Right. Well, there are different types of insurance, and they all solve different problems. Term is there for just a period of time. You buy a 20-year policy or a 30-year policy, something like that, and you're just trying to solve for that time frame.
Yeah.
Then there's also whole life insurance, which is good for your whole life, right? So you can buy insurance that gets paid up after 10 years, 20 years, different types of policies like that. And, the money can get invested in a number of different ways, and it can actually even be used to provide a tax-free income in retirement, which is kind of cool. So
how does that work? Explain how that would work.
So what we're talking about is some sort of policy that is a whole life policy. There are different types of permanent insurance. You've got whole life, you've got universal life, you've got variable universal life, and now we've got index universal life, IUL.
Right.
And they all have some sort of cash value component, which is money that's growing in there. Uh-huh. And you pay the premium. There's always an insurance cost. But as the cash value grows, at some point, maybe this policy can pay for itself, which is really cool. So
is it almost like investing in like a 401k or something where it matches what you put into it almost?
No, they don't necessarily match, but what happens is that cash value is invested somehow. It could be the insurance company's general account. It could be in the stock market. It could be in bonds. It could be somehow tied to interest rates or some sort of index like the S&P 500. And as that money grows, the cash value grows in there, the cost of the insurance actually goes down.
Sure.
So if you think about it, you buy a policy with a $100,000 death benefit, and you've got $20,000 of cash value in there.
Yeah.
I mean, the insurance company's only on the hook for $80,000.
Right.
And then it grows up to $30,000, and now they're only on the hook for $70,000. So the cost of the insurance actually kind of goes down as your cash value goes up. So that's kind of cool.
Is life insurance something you sell upon somebody? Because somebody has to seek you out for that, right? You're not going to just be like, hey, you know what? By the way, I do life insurance too. Yeah. Check me out.
Hey, Dan. So tell me.
right. So how can I sell you? Right. No,
right. Right. Well, that's one of the challenges. Life insurance is always a sell that I have to do. IRAs, people. Oh yeah, I want to retire. Everybody thinks about that, but nobody wants to think about Plan B. And so when I'm meeting with clients, we talk about different things. When their kids pop up, it's like, oh, hey, guess what? You got a baby? Now you need to be more responsible. Let's get you a term policy. Uh-huh. And we can do that. Or, maybe we can put away some money for retirement. We buy a whole life policy. Or, my father-in-law actually bought life insurance policies on my kids, and they were paid up after 20 years. So both my boys have life insurance policies that are totally paid up. They'll continue to grow in cash value, and they never have to make another premium. Well, that's pretty cool.
That is pretty cool.
Thanks, Grandpa.
Right?
Yeah. And my dad did that for me too. So I've got this whole life policy that's totally paid up. Now, when he bought it originally, it was a $30,000 death benefit, which isn't a lot. Yeah, I mean, today you can't buy a car for that.
Yeah.
But back in, I think he bought it in 1970, $30,000 was a good chunk of money.
Yeah.
So, it's not necessarily going to be all the insurance you ever need, but you can always add additional policies to your program.
Okay, so explain how this process would get started. If somebody walks in, and I want you to paint the picture of how you would literally talk to somebody. If somebody came in and said, Mike, I want to start an insurance policy, and I want all the different ways of how.
Unfortunately, people don't really come in and say, hey, I want to buy some life insurance.
They don't do that. So
No,
how does
they
it work
don't.
then, Mike?
But when I'm doing the financial planning process,
Okay.
what happens is I look at a lot of different things. And we'll talk about, what are your goals? What are your concerns? Tell me about your debts. How much money do you owe? You owe money on this mortgage. You have money on a car loan, these different types of things, maybe a student loan. And those things, those are all really important things. And maybe we need to cover those risks. What happens, to my wife if I get hit by a bus? And, all of a sudden my income is gone. Well, that can be a big challenge to my family. Maybe, would they be able to continue making mortgage payments?
Do you think with COVID and everything that's going on, and I'm just curious, and I want to ask this question, do you think a lot of people are just living paycheck to paycheck, or they're actually making those decisions, those smart decisions to do things like have life insurance?
I think the average American probably lives paycheck to paycheck.
What? And let me say this. It doesn't cost a lot of money to get started with having somebody like a financial planner, right? It doesn't cost a lot. So why is it that people just don't want to take advantage of setting up a life insurance policy or finding out how they can, put money away or put it into
the challenge is your average 20-year-old, they look at retirement and that is so far away. But the crazy thing is it's here before you know it.
Well, they're thinking, a lot of people, though, they're thinking they're just getting started, right? They're in college. Maybe they get out of college. Let's just say if you're, say in your 30s. Let's say you're in your early or late 30s. Most people, you said, are living paycheck to paycheck. I would say 70% of the population out there is living paycheck to paycheck. Yeah. And so when you look at putting money away for a rainy day, could you look at a life insurance policy as doing the same thing, right? You're putting money away for your family, not for yourself, but for your family. What if you don't have a family? Would it make sense?
Therein lies a challenge.
Right.
Does it make sense? If you're a single person, you've got a house and a mortgage, I mean, who cares if that mortgage gets paid off or not? Nobody really needs it.
No.
But you can use insurance if, say you make too much money to contribute to an IRA or a Roth IRA, you can use insurance as a way to put money aside in a tax-deferred vehicle, and maybe you take it out tax-free at the end.
Yeah.
So, life insurance can be a great way to reduce taxes in retirement.
It's a great way to reduce taxes in retirement. I think it's mindset. It seems like a lot of people, though, when you're talking about going and starting that process with you, because this is a conversation you have when you talk about the whole, do you want to start a portfolio? Like, what do you want to do? Correct. Then you bring it up at that point. But
sure, we try and look at the risks that a client could face. And we talk about all different types of insurance. Well, tell me about your auto policy. Are you covering enough? Do you have an umbrella policy? A lot of people never look at getting an umbrella policy. And
what is it, weird. Mike, what is an umbrella policy?
An umbrella policy is an additional policy, and you get this from your auto or homeowner's agent. And it's just an extra level of coverage. So if you hit a school bus full of kids, holy cow, that's going to be one heck of a lawsuit.
Right.
And so this can give you $2-3 million extra coverage, and they're cheap. They're like $200-300 a year.
I'm going to say this. I think look, if you're that type of person that you go out and you make these decisions, right? These are decisions that they always say whatever you do today could affect you tomorrow, right? That's the saying, right? So if you do set yourself up, I think it's a wise thing to do. How many people it seemed like less and less people are really looking at the avenue of trying to save for retirement. Is it because, and I don't know if you know this, but is the cost of living going up? Is that maybe a contribution of why some people don't do it? Is inflation coming into play? Like, is it less people? I mean, sure, you get a lot of people that do it. Is there less people or more people coming in? I'm just curious.
I think inflation's always there.
Okay.
But people don't always really plan for it.
Yeah.
If you saw the amount of money sitting in banks, you'd say, holy cow, that's a problem, because money in the bank does not keep up with inflation. But I just think people delay starting their financial plan because they just feel like it's not needed right now.
Correct.
I'll do it later.
Right.
And it's procrastinating. You know, there's an old saying, time is money. Okay.
Do you think that's our society, though, in general? Like, our society is built off of debt. Our society is built off of, we don't save for a rainy day. Maybe some do, but we're not geared towards that.
Well,
and the cost.
Yeah. And this is one of my pet peeves, is the schools do not teach basic financial planning to their students. And they need to understand, what debt does for you. I mean, interest can be good for you. It can be bad for you. If you have too much debt, then what happens, right? I mean, you can't get a car loan very easily, or you're going to be charged crazy rates. You may not qualify for a mortgage.
Well, you may not qualify for a mortgage, but in general, we have a lot of people, millennials, and I always bring millennials, but just people in general, younger generations, maybe they don't want to be tied down as much. I'm not sure. Maybe they don't.
That really is a thing. We're finding that a lot of millennials are not interested in home ownership. They would rather just rent and, stay here for a while and then move, a couple states over and live there for a while and then move a couple states again. And there's nothing wrong with that. It's not what I would choose, but.
Well, I think too, like I said, man, you have to have an excess, or not an excess, but you have to have somewhat of an abundance of money, a little bit, right? You got to make more. We always talk about this. If you're not making enough money where you can pay all your bills,
sure, and
you can still have a decent life and put money away, then that tells me that you need another source of income, usually. And you see a lot of people now, especially with me, working 2-3 jobs.
Sure.
Okay. A lot of people, they're just doing that just to survive. Is it because they don't make enough money? Maybe, but also would they start a second job or third job so they can start retirement, or they can start maybe investing into something like an investment property, or, investing into a life insurance policy? Like, these things, it just seems to me like there should be more of a notice. Like you said, there's not a lot of education out there for this stuff.
Yeah, I don't know that people would get a second job so they can start doing that. It's more to make ends meet.
Correct.
But also, I think it also has a lot to do with lifestyle. Are you living within your means? And if you ever listen to Dave Ramsey on the radio, he's always talking about, you cut your expenses to the minimum. You eat rice and beans, and you're just eating on the cheap. You cut all your expenses, get all your debts paid down, and it's really amazing. You listen to his people who call his show and say, Dave, I paid off $200,000 of debt and I'm debt free. And it's like, wow,
yeah, but
that's amazing.
I think, Mike, a lot of people, they only get one chance at this, right? They want to live their life. They want to experience things. And I'm not saying go out and spend your paycheck. And I remember people out here, when Vegas has a way of really bringing out the worst in people, or the worst in, as far as, let's say you're a gambler or you're an alcoholic, or you're something like that. So there was people that would take their money, go and they would get paid on a Friday, and literally go out and spend all their paycheck and be completely broke.
They would cash it
for 2 weeks.
They would cash their paycheck at the casino.
Correct.
Right?
Right. And I mean, it's right there at your fingertips, right? And so people just, I think in general, they're living for the moment in a lot of ways. And I think that's what I'm saying. They're not thinking 5 years from now. I have a brother that's somewhat the same, where smart guy. He's a smart guy. But the thing is, sometimes it takes a while for you to figure out that you don't live for the moment. You don't live, you may need to figure out where's my 5-year plan. And
well, that's the deal. You have to find a balance, right? Your uncle that passed away at 53.
53, yeah.
Right? I mean, did he have plans for his 60s? Did he imagine what they would look like? And he never got to achieve those. So you need to have some wins, some of those things that you want to do, throughout your life. And, so I've done some big trips. I've gone to China and India and, some different places. And I did them. It was a lot of fun.
Yeah.
But, I'm not trying to do everything right now.
Sure.
I want to save some good things for later.
So if I'm somebody that's like, let's go back to the situation with the uncle, right? Maybe he did have it right in the beginning. Like he was trying to do the right things, and then something derails you. Life changes. Your thought process
Life
changes.
happens.
Yeah, it happens, man. I mean, you don't know. Like sometimes you think you got it all figured out, and things change, and just life is different. And maybe being and sacrificing for those things, just like you said, the Dave Ramsey thing, sacrificing for later in life.
Sacrificing today for a better life tomorrow.
Right.
I mean, that's what it really comes down to. And imagine, some of these people paying off $200,000 of credit card debt.
Yeah.
They say, oh, we earned $60,000 a year and we paid this down and, we sold things and did this. And wow, that's amazing to go from $200,000 to zero debt. That's amazing.
Well, and I think, too, we're a debt-based society. So I'm going to talk about this for a second. You know the fact that we're printing money. We got the stimulus that came out. It's going to probably – it's not going to probably. It is going to add to more dollars in circulation. Yep. Inflation will go up. They're going to try to balance it, with purchasing bonds and treasuries and things like the Fed does anyways. That's when they come in. My thing is, so you have all these things happening where debt is increasing. Why would anybody want to just say, you know what, I can't keep up? Because as much as I'm trying to save and as much as I'm trying to get that nest egg for a rainy day, put a life insurance policy away, how do you hedge against stuff like that?
Well, yeah, saving for a rainy day, that's always a big question. With the government adding so much debt, I mean, that's pretty crazy. And we're throwing this on our kids. Now what they want to do is increase their income. So they want to raise taxes.
Right.
And I get that. That's fine. But the problem is raising taxes too much can stall the economy. And
it's a balance, right?
It's
a constant balance.
It's a crazy balancing thing. And, if you ever saw those old videos where the people spin the plates on a post.
Yeah.
And, they've got 50 of these and they run around keeping spinning those things spinning. That's really that's what the government's doing, trying to get all these things working together. It's a huge thing there.
So when you go back to it, though, you look at people when they're saying, I want to maybe save money. I want to put money into some type of retirement. I'm going to ask you this question: retirement versus a life insurance policy. Okay. Why would you choose? Why would you choose that, or would you choose that included with your retirement?
I wouldn't do just one or the other.
You would do it all.
Do both.
Okay. So you would diversify into. Explain.
Right. I would put money into my IRA, but I would also buy the life insurance policy. So the life insurance policy is there to protect my wife, but it's also there to protect, give me some sort of income in retirement. That's how I look at it. And then the IRA is just income only. Okay. Now, if I knew, I didn't bring my magic 8-ball here to tell me how long I'm going to live.
Right.
But, I don't know that. So I have to have that life insurance policy to hedge against this.
So the life insurance policy is constantly increasing in value. Is that right? Face value?
It depends. The death benefit usually stays the same, but the cash value is growing.
Yeah.
So my grandfather, when my grandfather passed away, my grandmother gave me $10,000.
Yeah.
And today I've got a whole life policy that's worth 6 digits of cash value because it's just been in there. Now, I got that when I think I was 18 and I'm 54 now. So it took a while for it to grow.
Right.
But holy cow, that's money that I can use for whatever. And I have used it. That's another thing is you can borrow against these policies, and I've done it a couple times. When we bought our last house, I did exactly what I tell people not to do. I blew my housing budget. we bought more house than we were planning on.
Right.
Right. You've never seen this before, right?
No,
that never
all the
ever
time,
happens.
Man. All the time. Everybody's always going a little bit bigger than what they should be.
We found the house.
Yeah.
Open the door and it's, this is it, right? I mean, I knew it from the front door. I'm like, okay, this is the house. And, every door we opened, this really is it.
Yeah.
It's it even more. So the problem was we had to do the backyard. We got dogs and all we had was caliche back there. So I borrowed money out of my life insurance policy to landscape the backyard, and then I paid it back. And the cool thing is when you pay back that loan, part of the interest is going to you.
So why would you do that? And this is just a question. Why would you do that versus just, let's say you have a retirement account. You can do the same. Now I know that a retirement account, like if you have like a 401k with a company, or an IRA or something, you could pull against it. I think there's only a face value of 60% that we'll use. And then you have to use it for a reason. Like, do you have to use the life insurance policy for a reason? For instance,
no, you can use it for whatever you want. I could borrow money out of my policy and go gamble with it. I go play blackjack. They don't care what you do with it.
Right.
Your typical 401ks, you can borrow money out, I think, for any reason.
Sure.
IRAs, you cannot.
Yeah.
You cannot borrow against an IRA. That is against IRS regulations. So don't go there.
One of the things I want to say is, so when you talk about, we're going to go back and talk about inflation. We're going to talk about, what's happening in the world today.
Sure.
And what is the impact that's going to happen with this stimulus check? Now, I was making a joke the other day with a friend of mine. And what we talked about was, how many centuries is it going to take for us to actually, if we stopped all of the debt right now, how many centuries would it take for us to pay this debt back? Like, I'm thinking centuries. I don't know, maybe. I mean, it's to a point where we're not going to come back. So the point is, what do we do? Like, how is it going to impact our economy here?
I think the biggest problem we have is our government is very short-term thinking, and they are only looking at the next few years, and it's basically election cycles, honestly. I read this story about a city that had been considering changing all their streetlights to LEDs.
Sure.
And it would save a good chunk of money. But the problem was that savings would not show up for about 5 years, and they were elected, the city council was elected every 2 years. So what would happen is they would be spending more money. They would increase the budget, right now.
Sure.
And, but they would save money later on. And because of that, they did not want to make a long-term investment. They only wanted to, keep the short-term good.
Sure.
Because they wanted to get reelected. And I'm not a big fan of Congress. I'll just leave it at that.
I don't think many are, Mike. I think there's a lot of stuff that people think, well, I'm going to get this stimulus and it's not going to affect me in any way. And look, we all know that's going to affect us somehow. But, is the economy, think about it. As much as we're doing and creating more and more debt, I don't want to go down this rabbit hole, but a lot of people may have a problem or may have an issue trying to save money or trying to get ahead. That's why when I'm doing loans, I'm having maybe another person get on a loan with me for a home loan, right? Because they don't make enough based upon the housing that they're trying to buy.
Sure.
And then the cost of living is higher. So the money left over per month is just not there. So I'm just curious to see if they keep doing this stimulus thing. I know it may stop because of COVID. Maybe they're thinking the vaccine's here, so it's going to stop. But I'm just curious to see what are we going to look like here in the next 5 years if it keeps going this direction,
Well, obviously, the federal national debt will just keep continuing to increase. Will they be able to pay for this by raising taxes? We'll see what they do. They always tell you one thing and they do something completely different.
Right. No, you're 100% right. So going back, when you talk about the life insurance policy, can you kind of put out there different ways that somebody could get started with it? Do they have to have a ton, like how much money do they need to get started?
So a term life insurance policy can actually be really cheap. You could buy, a young person could maybe get a $250,000 term policy for $20 a month, something like that. So if you have a kid in your early 20s, $250,000, there you go. It can help raise the kid.
So we're looking at this probably more, Mike, from a parent's point of view. If you're in your 20s, I'm going to say, right? Because
a single person really doesn't have a whole lot of use for life insurance unless they've got a big chunk of money. And, like I did, I bought this policy. I was single when I was 18 and I got this policy. So,
But you're the one off. I mean, how many? You're
my,
probably in the like 1 percentile of
my
people.
My dad was a financial advisor. My father-in-law was a financial advisor. So my dad pushed me. He said, "Hey, take this money and put it away. You will never regret it." And holy cow, 18-year-old getting $10,000. Wow, that's a lot of money. That's great. And what would an 18-year-old do with it, right?
Well, blow it in a day.
No, easily. Like, hey, I could go buy that Mustang I always wanted or something.
I mean, it's crazy. I get it.
Yeah. No, but Dad said, hey, you really ought to consider doing this. And so I did. And so whenever I get those statements now, I look and think, hey, thanks, Grandpa.
And anybody out there that's listening to this show, I want you guys to, if you have any questions for Mike, he's a financial planner, Peak Financial Solutions. And I bring him on the show because there's a lot of information I really ask him and don't know about, and I get that answered. Also, I think a lot of people don't know really how a financial planner, how they get set up with somebody like you, right? Or what is it? What are these things that you deal with, right? And I think that's what people are looking at.
Yeah. So, Cece asked a question or said something, your whole life you can't enjoy it until you reach 100 years old. That's not true. You can always borrow money out of the policy and spend it. And a lot of people will do that in their retirement. And that's what I'm planning on doing with my whole life policy.
Yeah. Well, but like I said, you had a financial planner as a father, right? Set you up. What if you're somebody out there that, I mean, I guess it's like, most people, they come from a situation where they're trying to figure out what they're going to do with their life. Some go to college.
Right.
Then they get that job, and then they're just trying to get themselves established.
Right.
Then they might buy their first home maybe in their mid-20s to late 20s if they're lucky, right? Mm-hmm. Most people, I think they start in their young, low 30s to buy a house. Is that still too soon? Like, if you're not, obviously,
I think you need to start with a financial planner the day you get your first job. I mean, that's really the best time to get started. I mean, imagine if you're starting to save and you get in that saving habit and you can save 10% of your income day one. Holy cow. I mean, you'll save a ton of money and you'll have an awesome retirement.
Well, I'm going to say this and I'm going to kind of put you on the spot.
All right. Go for it.
You ready? So there's been numerous times where I've talked to people. Mm-hmm. Do you know anything about hyperinflation?
Oh, well, yes, that's pretty scary. You look at countries like Venezuela, there's a great one. People do not hold on to cash because if you wait 2 days, that roll of toilet paper all of a sudden doubled in cost. So yeah, that's what hyperinflation is. They spend the money as fast as they can.
Can you explain how that happens? Well, how does hyperinflation get started? Because there's talk and there's things that we talk about like, well, we're going inflation. Could we actually go into hyperinflation here?
In the United States, I don't think so. We've got the Federal Reserve System, which is there, and they are tasked with keeping inflation in a certain band. So we don't want to get back to the big inflation we had in the late 70s, early 80s. That was a challenging time. And mortgages, holy cow, what were they? They were 15%.
Oh, they mortgages? Were 20% interest rate.
Yeah, I mean, holy cow. I'm at 3.25%, which is a lot today. I mean, so many people are getting them in the twos. But imagine paying 20% interest.
I couldn't believe it.
I mean, that would. What would that do to how much house you could buy?
Well, it's just today. You look at refis were going crazy last year. It was the refinance boom. It was, everybody was calling me about refinancing, and they still do. Sure. I'm not saying that there's still not an opportunity, but you still have, rates were low, and we didn't have a vaccine. The economy was still kind of shut down. We all know that negative news is good for mortgage rates for most of the time. And so moving into this next situation, we're starting to see this year, we're starting to see rates starting to go up. Guess what happens? People are very sensitive. Mm-hmm. If the normal thing that they've been seeing for a good period of time, it's almost like it's something it's just, you see 2.5%, 3%,
Sure.
That's right there. It says, oh, that's a great rate, right? But if you see it for years, you see it for a good period of time, like a long tenure of just, this is where rates are at, and then they see a slight uptick, you'd be astonished for how many people that actually retract from actually looking at doing a refinance, or they just put it on pause.
Well, I've had a lot of people say, oh, Mike, I hear there might be a 1/4 point bump.
Yeah.
So what? I mean, what's that really going to do to your payment. I mean, it's not going to change it that much.
It won't. And I think if you talk about loan size, I mean, yes, it'll change it a little bit, but I'm just, people are sensitive, and there's data.
$500,000 house, you can only afford a $480,000 house. Whoopee,
Yeah, right.
It's just, yeah.
I don't know. Like, I think that people, like you said, when you talk about hyperinflation, you talk about mortgage rates, you talk about the cost of living, you talk about credit card, the Fed's fund rate.
So what I think is going to happen, and if I had my magic 8 ball here, I would bring it out. I'll have to bring it next time, maybe.
Right.
And then we can just do the whole show via the magic 8 ball.
There you go.
That would be awesome, wouldn't it?
Yeah, that would be awesome.
Completely useless, random facts.
Well, nobody knows, man. Nobody knows.
Nobody knows. But what happens is the economy starts growing and starts doing well. What they'll do is they'll start doing little quarter point bumps. And you might see 25, 0.25, and then another quarter, they'll bump it up another quarter.
So when you say they,
the Federal Reserve.
Yeah, the Federal Reserve.
And so what that is, that's the interbank lending rate. This is what banks charge each other to borrow money.
Right.
And by controlling that rate, that kind of sets everybody.
Correct.
And so as the rates start ticking up, I mean, they won't raise it more than 1% the first year. They just won't. But if the economy really starts doing well, they may, bump it 0.5% a year, 0.75%, something like that. And then, we may go back to 5%, 6%, 7% mortgages, but that means the banks are also paying more money for savings.
Wow. 5%, Mike, are you going to still get a refinance? Or are you going to pass?
Well, I'm not going from 3.25 to 5. No.
And that's the problem, right? Most people don't understand that we're in a trend right now where it's going up, the vaccine. There's a lot of data out there that people are like, well, what's going to happen? But, going back to it, you look at, we talked about hyperinflation. Let's just talk about debt in general.
Okay.
If you got banks, right, you got a lot of casinos, and I was talking to somebody about this the other day, and it's actually a good topic about it is, you got all these companies, or it's all debt, right? You got a lot of casinos, they borrow money.
Yeah.
Banks, when something happens, they're bailed out, right? Government comes in, we can't let you fail.
Yep.
Okay. Why would anybody want to save then if they know that if the only way to really get ahead, and this is true, like the mindset is, well, if these businesses are just going to not care about what our debt situation is,
why should I?
Why should I?
Well, the problem is the government's never going to bail you out.
Yeah.
So if you do something stupid and just borrow tons of money, I mean, you go bankrupt and that's it, and you lose everything. So, you have to treat yourself different. I've always tried to keep debt to a minimum. My business is, low debt. I get these phone calls all the time. Hey, we pre-qualified you for $100,000 loan. You can use it to grow your business. No, thanks. I do not need debt.
Right.
And I'll give you a great example. Back in 2008, 2009, when everything was really hitting the skids, I was talking with a good friend of mine. He runs a construction company, and of course everything had stopped, right? I mean, nobody was building anything.
Yeah.
And I said, how are things going? He says, we're doing all right.
Uh-huh.
And he said, I own all my equipment outright. I've got no debt on my business.
Yeah.
And so all his expenses really were just maintaining the equipment. You got to run your bulldozer, grease it, do those things, and just do that stuff. And that's not very expensive. He didn't have a payment on that bulldozer, for example. And so he always kept the debt to a minimum. And so when all these other companies were going bankrupt because they had to make all those payments, but they didn't have any income, they all went out of business.
Well, you look at my grandfather. My grandfather is a big believer in you don't take on debt. But I think you have to. So again,
debt is a tool.
It is a tool.
It is a tool.
You have to have
There's
a part of it.
There's no way you can buy a house today.
No,
Let's just be realistic.
Yeah, or really a car. Like you look at the average car. I mean, you can go buy a Kia. Nothing anybody has a Kia, but
it's a great car.
It's a great car
at a great price.
But if you want anything beyond that, you're looking at $25,000, $30,000, $35,000.
And you
for
have
a
to
car.
save up for it, though.
Most people don't have 35 liquid. And
No.
who's going to go throw it down on a car, which is really not a great asset, right? So
it isn't really an asset because it's a depreciating asset.
It's a depreciating asset, right?
Your home hopefully is an appreciating asset.
Right.
Right. I mean, that's different. You never want to borrow money on a depreciating asset. Now, cars, you got to do it. I mean, you need transportation, but like a TV, you've got a nice TV here. In 5 years, that thing, we're going to look at it and say, wow, look at the horrible resolution on that, right?
Yeah. I mean, we'll be at like 12K or
50K or, I don't know what it'll be, right?
It'll be something crazy, right?
Yeah. So, I forget where I was going, but anyways,
it's depreciating. It's a depreciating asset.
Right.
And so
you don't want to borrow on depreciating assets. You don't want to borrow
what if
money
you got
on a
no
washing
choice,
machine.
though?
Well, if you got to do it, you got to
do it, right?
But, on a car,
I guess where I'm going is that the cost of things is going up so much, and your income, maybe the income wage is not matching that, because you look at the cost of housing, right? That's going up. We obviously know that the average person that's making $50,000 to $75,000, it's going to be a hard time to try to buy a home at $450,000.
Sure.
Right.
Yeah.
You also look at if you go buy a car, or if you just everyday cost, gas is going up, the oil cost is going up. You got lumber that's being passed. The cost of lumber is now being it's
175%.
Yeah, and they're passing that to the consumer if you're a builder,
they have
right?
to.
So they're not going to take the loss. So where does the average person out there get ahead? Because I'm looking at life insurance policies.
Okay.
And I'm looking at them as it's I hate to say this, but it's not a luxury, but it's an addition to if you have the opportunity. Like, what do you sacrifice if you're just making ends meet on a monthly basis to get into something like that? What if you just have no extra money and it can't go there? So what do you do at that point?
You can't do it.
So you're just stuck, right?
Right. I mean, if you're that tight, then life insurance is more of a luxury.
Yes.
It's often a what if.
Really?
Okay. And it's something that probably won't happen. But I always wonder, what if it does? I mean, can you afford $20 a month? I mean, if you can, and you want that protection, then it's a thing to do.
But that's not expensive, Mike. $20 a month, you're saying to do that? I mean, that's not expensive, is it?
It depends on your health and all this stuff. I mean, if you're 300 pounds and diabetic and, you're not going to get that $20 rate.
Yeah.
If you're, 25 and healthy, work out regularly, don't drink to excess, you'll get a great policy.
If you're somebody that's in your 40s, 50s, I would say, 60s, obviously it goes up as you get older, right?
It does.
Okay.
As you get closer to the average life
Sure.
expectancy, yes, it does it gets more expensive. But, buying insurance in your 30s and 40s, that's a great time to do it because it's still very cost effective.
So the money you put in now, let's say you can put $20, $30, $40,
Yep.
whatever it is. If you keep doing that to the time you're 60, 65, 70, that will accumulate a lot of money, right? For
Well,
somebody.
it depends on the policy.
Okay.
Again, if you're buying a term policy for $20 a month, that's going to have no value at the end of that term. That 20-year policy,
Yes.
it just, most people just cancel it because it gets crazy expensive. But if you're putting money into a whole life policy, now here's the problem. Whole life policies are more expensive.
Okay.
All right. You might be paying $100 a month for a similar policy. Can you afford that? This is just another way to save for a lot of different things. And, that's how I look at it. It's just another type of savings vehicle. This one just happens to have a lot of protection on it.
I don't know if you have insight on what the economy is doing. And I'm not going to, because look, everybody always asks, the market going to crash and why are we where we're at and why are these things happening? And this is not a topic about like, save all situation, but you talked about taxes and you talked about inflation. This is stuff that people really don't know. We talked about the fact that the school system does not teach you these things. So we look at homeless people right now, right? There's a lot of homeless people. There's a lot of people that are struggling. Mm-hmm. Okay. Is there a way for them to, and I'm not saying, but is this just going to keep getting worse for them as those costs of living keep going up? You're going to see more and more people, go into being homeless or having struggles. Because I think that when you look at this stimulus package, it is going to help for sure. I'm not saying.
Oh, sure. For a lot of these families that are living paycheck to paycheck, an extra $1,400 is
huge.
Everything. Or,
right.
Especially if two people get that $1,400. I mean, that's amazing.
Right.
So, it really can help, but, hopefully people aren't just taking that money and going buying TVs with it.
Well, yeah, we talked about that,
Right. The last one.
Yeah.
I mean, there was a funny picture of a Walmart and all these TVs for $5.98, right?
Yeah.
And I was like, oh, that's pretty convenient. I think people ought to look at this money as an opportunity to make some changes in their life. And, hey, maybe I just put that in the savings account, and that's part of my emergency fund now. Hopefully I won't have to touch it, but if I blow a tire or something like that, I've got money that I can pay cash to have this thing fixed.
This lack of education that you're talking about, is that going to hurt us in the long term?
Oh, it clearly is.
Right.
I mean, I'm calling on our school district. I talk to our state representatives. We need to do this. Now, here's the deal. My wife was on the committee that set the social studies standards for the state of Nevada.
Wow, really?
Yeah. I mean, that was kind of cool.
Okay.
She's got a PhD in education. I know she's smarter than me. But she, got appointed to this committee. I said, oh, this is amazing.
Right.
Honey, guess what? We need to put in some financial planning into the process.
Sure.
And she just kind of looked at me and sadly said, I'm sorry, it's already there, but they don't teach it. I said, why is that? Because it's not on the standardized test that all the kids have to do. See, the federal government has these standardized tests that all the schools are kind of graded on. And so all the teachers are teaching to that content. And it's so disappointing. Now, if your kid's in a private school or a charter school, they may not have to do those tests, and they may actually get some sort of financial planning. So I had a kid who went to Faith Lutheran, and yes, they actually talked about some of these topics.
So you're saying that if we continue down this path, we're going to have a situation where our economy is going to keep suffering, potentially more people out of work. Do you think jobs are going to get better? Do you think things are going to start to come around? Or because look,
as the economy opens up again, as the casinos start getting more and more full, what's that going to do? I mean, they're going to be bringing back employees, and things are going to start happening again. So this has given a lot of construction actually kind of a boost. Because I was just at the airport this weekend, and holy cow, half the sea gates are blocked off, and they are just ripping them out and just redoing everything. And, wow, what an awesome time when air traffic is down so much.
Sure.
So, yeah, there is some stuff going on right now. So you look at the airport, and, how many casinos took advantage of this to redo a floor or something like this. You don't have to build those temporary walls to make everything look nice. You can have their workmen leaving their buckets out, and it just doesn't matter because there's nobody around.
Right.
So, I mean, they are doing some things, and there are a lot of people working, but there's so many people out of work that their regular job is just it's gone, or they're down to 2 days a week.
So if you're somebody out there, would you rather, let's say you make a good living, right? I think you do, but let's just say let's say you make $2 million.
All right.
Okay. And
I like that idea.
Yeah, it's a great idea, right?
I make $2 million.
You make $2 million a year, not in total, a year.
Wow. Okay.
Okay. Would you put your money into the stock market or into, obviously you'd put it into a life insurance policy, but in the stock market or
How old am I?
54?
54?
Yeah.
Okay. If I made $2 million this year, what would I do with that money?
Correct.
Well, first of all, Uncle Sam would take a lot of it.
Right. A ton of
say
it.
Goodbye to 40% of that.
Right.
So now I've got, that'd be a lot.
Be a lot.
But yeah, now I'm down to what, 1.2 million.
Yeah.
But, it kind of depends on what my long-term goals are. Do I want to retire at 60? Do I want to retire at 65? Or, hey, is that enough money for me to live on my lifestyle? If it is, I could just take that money and go live on an island somewhere. Who knows?
Well, like I said, because it's a good point that you're making, but a lot of people don't know, should they trust investing money that way? Because let's say you got money, right? And let's say you want to diversify and you want to get a return on your investment.
Sure.
Is it like, I know you need a portfolio and you need to diversify and,
right.
But with everything that's going on, do you think a lot of people are sketchy now? Like, well, if I put it in the stock market, that could go sour.
I've had a lot of conversations about that because Monday the stock market hit another high.
Right.
Yay, that's cool.
Right.
Well, when it hits a high, that means it could get a low soon.
Yeah.
Not an all-time low, but maybe a 52-week low. Because the market is so cyclical. And
it's crazy right now, isn't it?
I get it. Yeah. I mean, it's amazing that it's doing so well when we're dealing with COVID. I can't quite explain it. But, would I invest in the stock market? I still would because I believe in American companies. Do you think Coca-Cola is going to go away in your lifetime?
No, I mean, I don't think so.
No, there's just no way it could.
No.
I mean, let's just be realistic. Or Apple, or
what would
Microsoft.
it take for something like a company like that to really go under? I'm curious. Like if you had Apple or Coca-Cola or some company.
Well, here's a great example: Kodak.
Okay.
All right, there was this great company, and they developed something that put themselves out of business. They developed the electronic camera, the digital camera.
Yeah.
Is that whoops?
Right. So there's certain things that would actually put them out of business. But I'm saying,
if they're diversified enough, then they shouldn't be affected by that. Now, Kodak's does still exist, mainly as a chemical company, but Coca-Cola, they're really widely diversified. They've got all sorts of different drink lines.
But it's like smoking, right? You look at smoking, you look at Coca-Cola, you look at things that are really not good for your body. And we've had a lot of topics. And the news comes out and they're like, it's not. But you know what? People still buy it, right? They still want it. I go into a gas station.
Sure.
Half the people in those lines are looking for cigarettes.
Yeah.
Still. And it's the number one thing killing people today when, lung cancer and all, but they're still doing it. So how do these...
I think that's the same thing as that 20-year-old thinking about retirement. That is so far away.
Huh.
I don't know.
Huh?
What do you think?
I don't know. I think that like I said, people live in the moment, but I also think that it takes a lot. Look, if you have a Coca-Cola, you file bankruptcy. All they got to do is file bankruptcy, right? Hey, I didn't do something right. We screwed up. File bankruptcy. Okay, slap on the wrist. We get we have to pay some fees and whatever. But
it kind of depends. Why did Coca-Cola go out of business, or what happened to them?
If they did, right?
If they did. So, if it was from financial mismanagement, I mean, that could be something that could be fixed. If it's just that nobody's buying their products anymore, like Kodak, then holy cow, you should have shifted your business at some point. IBM's a great example. They used to sell these big computers, right? They used to have these, tall, 6 foot tall boxes and just rows and rows of these things. And now they don't sell many of those. They're more a services company now. So they pivoted their business to stay relevant. And that's the big challenge is you have to stay relevant to be, keep up in business.
Well, you got a lot of these people self-employed. Mm-hmm. And let's say you're somebody out there that's a business owner, somebody that, you're doing your Schedule C or a corporation, S corp, whatever it is. But you've heard the too big to fail. You've seen what happened when the banks went under, and a lot of these companies, they came in and bailed them out. There's nobody going to bail out the the middle class person, the person that's maybe they're making the
and
150.
That's one thing that really frustrates people. How come they won't bail me out?
Well, it's funny because COVID comes out and they give all these, these loans, these loans. So what happened with 2007, 8, 9, when all of these are 6, 7, 8, 9, when all these things were happening, why would they not give those loans at that point too? Meaning keeping people in business and look, the
government was really slow in acting. There were way too many foreclosures, right?
Sure.
I mean, they had that robo foreclosure thing, and they just punch them through, and all of a sudden people would be kicked out of their house and like, well, wait a sec, how did that happen?
Yeah.
And a lot of them were wrong. The bank didn't even have a mortgage on that house, yet they foreclosed on it. How do you do that? I don't know. So they definitely had to put the brakes on it, but maybe they should have done that earlier and given people a little bit more relief. But nobody knew how bad the problem was going to be.
What about for businesses? You know, we talk about life insurance policies, talk about, you know, people that are self-employed.
Sure.
That's a big risk. You know, self-employed buyers for me are the biggest risk. They got to prove with a profit and loss. They gotta come up with bank statements to back it up. If they don't, they got to get an audited profit and loss, which is like $7,500 from a CPA. So the question is, what happens if something is going on with the economy where their businesses suffer? And let's say they're putting money into a life insurance policy. Is there something else that they can maybe talk with you about putting their money into in case of a rainy day? Because they're not getting bailed out.
If it's a whole life policy, that policy can be used for the rainy day. I mean, just like my backyard that I had to do. We moved into a new house. I spent all my cash. Holy cow, I need some money to do my backyard. And I mean, that's the neat thing about a lot of these policies. They can be used in an emergency too.
Well, I want to say if you're somebody putting money into a savings account, what is the difference? Because I want to clarify, what is the difference if somebody's, let's say you're good with money. Let's say you're somebody out there that can just, you know what?
I'd like to think I'm good with money.
Well, you are. I don't know if I am, but you are. You put $20,000 in, let's say you save it, right? I'm focused. I'm saving $20,000 a year, and you know, all of a sudden, boom, something happens, right?
Sure.
And what do you do? What do you do with that situation? You know, if you're a business owner, let's say you're looking for an opportunity to pull that money out, because if you're saving that much money versus putting it into a life insurance policy, why would you change it from that?
I think you need to do both.
Okay.
Okay. It's not a one or the other. A business should save up cash for that rainy day, but that insurance policy is really there to protect the owner and the owner's family. So you're doing two different things at the same time. So yeah, my own business, I've got a little savings account. I squirrel some money away, and I keep that there, and that's a nice chunk of money, but I'm not spending it, and I leave it there. I'm not investing it because I want to know that it will be there should I need it for one reason or another.
Sure.
But then, the income that I'm taking off is getting invested, and some of it goes into my insurance plan, some of it goes into my retirement plan, some of it goes into my next car fund.
Yeah.
So, I'm doing a bunch of different things with the money at the same time.
Is Dave Ramsey, is he a financial planner?
He is not a financial planner.
So then he talks like he's a financial planner. My question is that too conservative? Like, it seems like when I see him and people like him, it's like, look, don't live your life. And this is where I understand you gotta have some reserve, right? You can't just, I'm going to go out and I'm partying and I don't care and I'm not going to look at my financial statements. But it just seems like it's just, you really got to just get, you can't do anything, right? You're just,
Dave Ramsey is a lot more conservative than I am. If I was him, I would be paying off my mortgage much quicker. 3.25%. I mean, that's still a heck of a rate, and I can make more money in the stock market. So I'm not accelerating the payment on my mortgage at this point. He hates all debt. And so he would pay off that mortgage as fast as he could, not at the expense of his retirement accounts, though.
Yeah.
I mean, he always wants to max out the Roth IRA if you can, or your traditional IRA.
Sure.
Or, put a good chunk of money. Always get that match out of the 401k. But he would encourage me to pay down that debt. And, so
but Mike, would you think that there's an encouragement to create debt? Because our society right. Oh. So if our society,
you can't watch TV and not see an ad. No. You can get a sofa with 0%.
But for this engine to keep going, like you said, buying a home, you have to use debt, right?
Yeah.
And buying a car, most people, I would hate to say it, they're probably using a loan,
and that's fine.
The point of it is, there is some positives, like you said, to getting debt. It's just when you get those credit cards and you got $28,000 in credit card debt, or you got those things. Do you really need that?
Or your phone on a credit card? That's
there's a balance, right? There's a certain, you can't go too far. It's like a pendulum. You can't go too far one way. You got to have a happy medium somewhere.
Yeah, and instead of buying a Camaro, maybe you need to buy a 2-year-old Toyota Camry or something like that. people, there's a stigma to a used car, but holy cow, you lose so much money when you drive that new car off the lot.
Yeah.
Right?
You do.
It's just huge depreciation. You can buy a 2-year car, save yourself a boatload of money. Your monthly payment will be a lot less, and you may actually be able to pay that car off in a reasonable amount of time.
I look at Dave Ramsey, and I look at what they do.
I have more hair than Dave Ramsey.
You actually do. Yeah, you actually do. I look at it as like going to the gym. All right.
Okay.
So everybody needs a coach. Why?
Yeah.
Because they can't go to the gym. Right.
Well, guess who else is a coach?
You're a coach, right?
Yeah.
And so one of the things is this: you need a coach, but I also think that people can't just, well, I'm going to go work out, as much as I need to 3 or 4 days a week. Mm-hmm. It's got to be a lifestyle. And I think the only way that these people really, because they don't have, and I'm not saying everybody, I'm just saying the masses, the society as whole is middle class. They're using debt and they're using resources for that, and they got stuff coming at their fingertips to go buy things, and it's but they need that structure. They need somebody to come in, and I think that's why everybody follows Dave Ramsey so much, is because he looks at it as
he's there every day.
Yeah, he's the extreme though.
He is.
He's almost like an extreme coach, where it's like, well, I know my personality, and I know that I need support, because just like a coach, if you go to the gym, what are they there for? After about 2 months, you already kind of know what they're running you through.
Sure.
You know what they're going to do. Bench press. Yeah. It's going to be the lat pull down machine or your leg press. The point is you're there because the coach is telling you, hey, I'm here. Where are you at? And I think people need that. And I think that's why Dave Ramsey is successful, is because people can't balance going too far. It's like, if I got this stuff, I got all this debt, I got this credit, and I got all these things that I can go buy. What are your thoughts? Like, what do you think? You think that's kind of where...
I think it's really useful to have a coach. I mean, all the sports stars have coaches.
Yeah.
Right? There's somebody there. I mean, LeBron James is an awesome basketball player, but he's got somebody who says, you dropped your arm, or, you did this or you did that. And, try it again. And, they need somebody to, who's kind of a third party to just stand back and say, wow, you missed something. Tiger Woods always had a golf coach.
A golf coach, yeah.
And
it's funny, you look at his coach or the caddy.
Yeah.
The caddies are somewhat, they kind of direct you. They know what
they know the greens and the greens, the course. Yeah.
So when you have that, there's a dynamic to it.
Sure.
When it goes away, look what happened. I mean, I'm not saying he didn't succeed, but he's not been the same player. So getting that coach, I think when you talk about like Dave Ramsey and people like that, because this guy's all about, killing debt and not having any debt in anywhere. I'm not saying, but is there somebody, like, can people, the average person out there, decipher between the, what needs to be important, what's not, and not really need a Dave Ramsey?
I don't know anybody else out there who's got that reach.
Exactly.
And I really think Dave is awesome for the country. Now, I feel like home mortgages are okay debt to have, because...
Well, I think it's necessity. It's like this. Who's going to take $350,000, $400,000, especially in today's market,
right,
and go put it into a home? You know?
But my point is, you don't have to be in a hurry to pay that off like Dave would. My theory has always been, if you're trying to grow your net worth, you just keep making your regular payments on the house, and you maximize as much money into your retirement accounts and other accounts that you can, because they're going to grow more over there. People always say, well, my house will appreciate. Your house is going to appreciate whether you own it out, you pay cash for it, or you got a dollar down FHA loan, right? I mean, it appreciates the same amount. So it doesn't matter whether it's paid off or not. Yeah. What matters is your net worth, and that's going to affect your lifestyle.
Do you think Dave Ramsey succeeded because there's lack of education with this?
Clearly.
I mean, because you think about it, they have nowhere to go. There's nothing out there that tells them. And look, I think it's the extreme. I'm not saying that don't go up. You got to still live your life, but you got to live within your means. We always talk about that, but you can't just be, I'm living off of oatmeal and
rice and beans.
Rice and beans.
Rice and beans.
Yeah, you can't do that. I mean, that's great. You always get these people that are like, I just went too crazy. But if you're somebody out there that can balance your life, you don't need it. You don't need an everyday coach. You might, tune in and But you don't need an everyday coach that's telling you, don't do that,
Right.
no debt, don't do anything. I don't know. To me, I think you gotta have your own thought process
Dan,
too.
but we were talking about earlier average Americans living paycheck to paycheck. Maybe
Right.
they do need a Dave Ramsey to listen to. I download his podcasts and I'll listen to him a couple times a month. It's kind of interesting to hear what he's got to say, and it's fun to hear the stories, and it gets me a little motivated or something. And, and it's kind of fun. But I work with people too. I was talking with somebody today. She's got a PhD. She's a psychiatrist. Psychologist.
Psychologist.
Yeah, that's the PhD, not the MD. I think.
Right.
Somebody tell me if I'm wrong. Anyways, she's got all this student loan debt, and we were talking about it. And oh my gosh, she's got all this. And
student loan debt is amazing right now. And are they coming out to relieve that?
Well, they're talking about it, but if I were king. And nobody's elected me king yet.
Right.
I'm not in favor of canceling student debt, but let's get these rates down.
Yeah.
Why can't we refinance this? Maybe the government does it or the Fed does it. And, this person has a significant chunk of debt and is paying about 6.5% on that.
Right.
6.5%.
It's a big number, man.
It's a big number.
Especially if you got $100,000 loan. I've seen...
This was north
of that. Huh?
Oh, yeah.
I see credit reports all the time.
Oh, yeah.
And I see credit reports that have literally sometimes $200,000 in total loan debt for student loans. They have sometimes. I've seen one where it had over 30 accounts. Mm-hmm. Small little loans, 5,000, 8,000, 12,000.
Right.
And I'm sitting here thinking, how the hell is anybody going to get out of this? How is somebody really going to get out of this situation?
You're paying $20 on this one, $15 on that one,
right.
$30 on that one. That is just so frustrating, the student loan system.
Right.
I think instead of canceling debt, maybe they should figure a way to help people refinance it and, more at today's interest
or
rates.
how about this, refine the fact that maybe that much debt's not needed for an education. I don't know.
Well,
that's
education's way too expensive.
That's another topic.
Oh yeah,
but
we can spend all day on that.
But I'm just saying, when you have $200,000 in debt, you know what I mean? And you're sitting there paying this over a period of time, that's a lot of money just to go to a college or go to a school. I understand if you're a doctor or something like that, but that's still a lot of money, man.
Oh, sure. If you're going for an MD or a law degree, something like that, yeah, go ahead and knock yourself out, take on all that debt. If you're going for a art history degree and you hate teaching, what are you spending money for? What are you going to do with that?
Yeah.
That's a real tough thing to pay that debt back. It's really interesting the difference between student debt and getting a mortgage, right? You have to figure out what are the chances of getting the money back. Right?
Yeah.
That's job one of an underwriter, right?
From an underwriters, they're looking at how, and that's a good question, Mike, actually. Underwriters are protecting the bank, the investor.
Right.
That's their asset,
How do we get that money back?
How do you,
what are the chances?
The number one thing is the ability to repay. Okay, we have a sheet that says ATR, the ability to repay, right?
Okay.
It's an ATR sheet, and it's basically breaks down exactly what this person's making. I'm going to say most people want to maximize, and there's nothing wrong with it. I'm not going to say, but just like Americans, right? We don't want to feel like we're left out. We don't want to feel like we're missing the boat. We're not, a lot of people want to live up with the Joneses, as the terminology says. For me, I see a lot of people trying to get approved for the maximum amount of a loan that they can. Okay. Now, is it smart? I don't know. That's your decision.
I would say no.
Okay.
You should back it off a little bit, because the maximum loan, what does that mean? That means you're spending as much of your income as possible for your regular mortgages. And I think that could put you in a tight spot. Do you like to take vacations? You can't do that if you get the maximum loan, I think.
Yeah, it's true. I think people do.
Depends on the vacation.
Yeah, but, I think people still live in, they got the opportunity to still live within their means, and they still, they still can get by. But you're putting everything into a house, which is fine, but you're just not going to have any extra money. Now, when we talk about what's going on with this whole life insurance policy thing, we're talking all about all these different topics, because it does encompass the fact of why people don't invest into life insurance or why they don't take these things seriously. And it's because it's lack of education. Most people, like I said, need a coach.
Sure.
There's no direction when it comes down to what shouldn't I do. And most people live paycheck to paycheck and they live the moment, especially people that are younger. There's no direction from the older generations because it's just like anybody else. Yeah. They pass down whatever was taught to them for the most part. And it takes somebody to step outside of the box a little bit and say, it's astonishing to me because I see some people, young 20s, they get into real estate. I'm like, how the hell did you find this? Right? Who told you this? Oh, my mom's in real estate. Or my dad's is an appraiser, and it's because somehow somebody stumbled into it usually, and then they kind of give them, hey, you know what? There's money in real estate. Sure. There's money in financing. There's so just like you, there's money in financial planning. I'm just saying there's people don't maybe have the extra money because they're living paycheck to paycheck like we talked about.
Right.
But what is the real reason why people don't get a financial planner? And I think it's lack of education. What are your thoughts?
I think it's lack of education, and they just think that it's for retirement only. And
what if you don't? But the thing is, what if you started early, right? And then you get to a point where you're in your early 40s and you got a nice nest egg.
Yeah,
I don't know.
Next time we'll have to find a webpage I made, a blog article.
Yeah,
and it just talks about time is money.
Yes,
and I show these two people, and this guy's putting away, I forget the exact numbers, but let's just say it's $2,000 a year, and he starts at age 25, and then this other guy starts at 35.
Yeah,
and the 25 only puts money away for 10 years. The 35-year-old, he puts money away until 65. And it's kind of crazy, but the person who started at 25 at 65 will have more money, even though he only put money in for 10 years. And the person who started at 35, he put money in for 30 years, and he has less money.
Last question on this, and we'll end this show.
Last one? Probably.
Last one.
Okay.
Last one. I know you're tired, Mike. You got off the plane, and you're probably pretty tired. You did a red eye, right?
Yeah, I didn't mean to, but
yeah, it just happened.
That's
what
happened. Yeah.
So
fortunately, it was from San Diego, so that's only an hour.
Dude, San Diego's so nice.
It wasn't yesterday.
No, overcast.
Oh, it was raining.
Yeah.
So.
Well, I want to say this. So you have a trust, right? Somebody sets up a trust. We're gonna have somebody come in and talk about trust, right?
Yeah.
You got some. Yeah. Hopefully soon. Somebody sets up a trust, and that's passed to their heirs, right? Where there's a will is not bulletproof. You got to go through a lot of process to
probate. Usually.
Probate. Yeah. So, but if let's say you develop a trust, what's the difference between a trust if somebody's going to, let's say, give assets, give value, monetary value, versus life insurance policy?
That's interesting. A trust can control the assets a little bit more.
Okay.
So I hope my kids aren't listening, but the way my trust is set up is they would receive so much at 25, so much at 35, and then the rest at 45.
Yeah.
Because, hey, I was in my 20s once. I know, you get stupid.
100%.
And so those are the cool things you can do with a trust. And just naming somebody as a beneficiary on your life insurance policy, they just get a check from the insurance company.
Right. They just get cut a check, right?
That's kind of different. Now, there are things called ILITs, I-L-I-T, insurance.
So the question,
life insurance
the question I have though is when somebody's going to meet with you, obviously they got a sense of direction. Is there a difference when you would actually advise that as far as setting up a trust? I don't know. I know you don't set up trust, but let's say they came to you and said, hey, should I set up a trust? I'm going to set up this life insurance policy with you for the insurance and, in case something happens. But would you also set up a trust and would it give you the same benefit, I guess?
I don't think so.
No.
A trust is really there to give your money as effectively, efficiently from one generation to another.
Okay.
And the life insurance is there to protect against an early demise.
Sure.
So, my trust really is designed to deal with things after I die in my 70s or 80s.
Right.
That's my hope, right?
Yeah.
And, by then, hopefully I've spent all my life insurance money.
Any last thoughts on this? I'm going to say, we're going to come back. What, are you going to be back here in a couple of weeks, Mike?
2 weeks would be good. Yeah.
All right. Take a break.
Yeah.
You know what I mean? Have some drinks.
Go back and get some sleep.
Get some sleep. But I think we had a good topic today. I think we covered a lot.
You can talk on this thing forever.
Well,
I hope we didn't bore people.
No, well, it's the education part of it. Look, we all don't have the answers. You know, we can just give you what we've learned, and
here's the deal. Everybody's situation is different.
It is.
It is.
And they might pick up. Everybody always picks up different bits and pieces from everything. They might not even listen to this and be like, "Dude, that was whatever." I don't care. But they might get some stuff from you that says, "Well, I'm going to think about some things." They might be bits and pieces of what they're not going to take everything and be like, I'm going to just follow this. Yeah. Even Dave Ramsey people, man. I like Dave Ramsey. I'm not saying I don't like him, but it gets to a point where it's just nauseating of how much is just the same.
Well, it's a cult following.
Yeah, it's really like
the same thing all over and over again. Yeah. I mean, when they do their no debt yell, it's all the same thing over and over again.
It's just too much.
No, it's really impressive. And, imagine if Congress actually learned the Dave Ramsey thing.
Well, I think there's a situation going on though where they're generating debt because I really feel like the government has to generate debt because we're a debt-based society. So it's kind of counter of what you know what I'm saying? They're almost clashing a little bit. So
sure, and, I don't know. And the government's debt is a lot different than your debt or my debt.
Sure,
because they can print it and they can issue debt, and they do it so they can. Keep the economy going.
Yeah.
And benefit all the citizens.
If you guys have any questions, you can always make comments in the comment section. We're going to end this live stream, but we appreciate you guys, whoever's out there that's tuned in with us. We're trying to educate and bring value to you guys, and we'll be back. I'll have another show on Saturday. So, guys, thank you so much.
Hey, Elena and Cece.
The French Workbench podcast. Yeah, absolutely. Thank you guys for commenting, and we'll see you at the next live stream. All right. Thank you for watching an episode of the French Workbench podcast. If you want to tune into past episodes, please subscribe to my channel now. Also, if you want to look at our audio-only options, we do have iTunes and SoundCloud.